Like most other professions, the insurance world has its own terms and terminology. If you don't want to be scratching your head when you're reading a policy document, learn some basic insurance speak from our professor of Insuranceology. In this episode, let's look at a few key terms you'll come across on every policy document. Let's use this policy as our textbook and decode the insurance terms in it. The first things you'll see in the policy are policyholder, life insured, and beneficiary. What exactly are they? The policyholder is the one who purchased the policy, in this case, Jacqueline. She's also the one who pays the premiums. The life insured is the person covered by the policy. Since Jacqueline bought the policy for her husband Donald, the life insured is Donald. Beneficiary is an easy one. It's the person who will receive the claim benefits from the policy if the life insured unfortunately passes away. In this case, the beneficiary is Jacqueline. The policyholder is the one who owns the policy and, as such, can exercise the rights stated in the policy provisions. These include surrendering the policy, withdrawing the cash value, and changing the information and options in the policy. When it comes to insurance, you can't buy a policy for just anyone. There needs to be an insurable interest between the policyholder, life insured, and beneficiary. What that means is, if anything were to happen to the life insured, it would have a financial impact on the beneficiary. Going back to Jacqueline's example, if Donald unfortunately passes away, his wife Jacqueline would have to cope with the mortgage payments on her own. This, then, is the insurable interest between Jacqueline and Donald. We often talk about a policy as having a sum insured of, say, 5 million Hong Kong dollars. What is the sum insured? Sum insured usually refers to the benefit amount used to calculate the values of the death benefit, critical illness benefit, etc. Let's say Donald's policy has a sum insured of 5 million Hong Kong dollars. If he passes away while the policy is in force and the death benefit is 100% of the sum insured, then the insurance company will pay Jacqueline a death benefit of 5 million Hong Kong dollars. If a policy has a savings element, you will see something called a cash value on your annual policy statement. Typically, a policy's cash value is relatively low during the first few years. The amount varies depending on the policy. The policyholder can only collect the cash value accumulated in the policy when the policy is surrendered or reaches maturity. In theory, in the case of an early surrender, the cash value you would receive could be less than the total premiums you have paid. Again, we'll use Donald's policy as an example. Let's say the couple need to end the policy for some personal reason, and the current cash value is 887,650 Hong Kong dollars. If Jacqueline surrenders the policy at this moment, then that's the amount of cash value she would receive, but she would be giving up the protection offered by the policy. There is a lot more to insurance policies than what we have covered. To protect yourself, don't just buy a policy. Learn the terminology too. See you next time.